Welcome to Ask the Expert, a daily series from 8:30 a.m. to 9 a.m. to help small business owners. Please feel free to ask any questions in the comments or by using hashtag QBATE on Twitter. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7 to help you. QuickBooks also have a dedicated COVID-19 information site. Just go to QuickBooks website, scroll down a little bit and click on the big Learn More button under the header Support you and your business during COVID-19. Morning, my name is Peter Jarman. I am the managing partner of PJCO Chartered Certified Accountants. We specialise in helping small and micro business owners build better businesses for themselves. As a firm, we are QuickBooks Firm of the Future, and we only work with business owners that use QuickBooks online. Today, we're going to talk about the small business community. We're going to talk about excuse me a minute. Today, we're going to talk about limited companies. In my time in business, I have seen numerous small business owners not understand how a limited company works. Sorry, I'm going to start again. Today we're going to talk about small business owners. Limited company. Okay. I'm going to talk to you today about limited companies. Too many small business owners who simply don't know the rules of the game. Like playing Monopoly at Christmas. If you're playing Monopoly at Christmas with your family and friends, you would really struggle if you didn't know the rules of the game. So to improve your chances, you've got to understand the rules of the game. What we're going to do today is go through a 10-minute resume setting out the basics on how you run your limited company and how you stay on the right side of the law. So I'm going to start with the two ways in the UK that you can run a limited company: sole trader or limited company. I'm not going to concentrate too much today on sole trader. You would only really be a sole trader if you were a very small business, low profits, very little risk of going wrong, very little risk of anyone suing you, and not having any employees. That's probably the only time you think about sole trader. I'm going to concentrate on limited companies. Now, why would you want a limited company? You would want a limited company if you were wanting to reduce the risk. You wouldn't want to lose your house, your car, your TV. If you didn't want to lose any of those sorts of things, then you may well want a limited company. A limited company gives you, sorry, I've got echo going on in the background here, so I'm hearing myself repeat myself about 5 seconds later. Hopefully that's better. Thank you for getting rid of that. A limited company is a separate person in law. It exists like you and me. It has its own registration at Companies House, and it exists as a separate person in law, has its own registration at Companies House, and it really, it just exists like another person to you and me. Now, the limited company is the entity that is going to deal with your customers, and the limited company is the entity that's going to deal with your suppliers. The limited company is also going to employ your employees. You, as an individual business owner, are going to be the director of the limited company, which simply means you work for the limited company. And you're also going to be the shareholder of the limited company, which means that you own the limited company. Now, those two positions that you hold are quite separate from each other. As a director of the limited company, you're, as I say, simply working for the company. You're in charge of the company. And as a shareholder, you own the company. Now, there are only 3 ways that you can get paid as an owner or director of your own limited company. There are only 3 ways that you can get paid without causing yourself problems in running your limited company or extra tax liabilities. The first way that you can get paid is by way of, as a director, receiving a salary. Now, as a director, you can receive a salary, and that salary will be subject to PAYE. You will have to pay tax and national insurance on a real-time basis, real-time information basis. Tell HMRC on the day that you pay the salary, and you will, at that stage, deduct tax and national insurance from your pay and pay across the net to yourself. So that's the first time that any money will come out of your limited company. The second way that any money will come out of your limited company is if you, as a director, incur expenses on behalf of the company, then you will be able to reclaim those expenses. So if, for example, you buy some stationery, or you pay for a parcel, or do some business mileage, you're able to claim back those expenses from the company. When you claim back those expenses, generally what you'll do is an expense claim for a month. Top that up, it'll come to a figure, I don't know, £256, and you'll claim £256 from the company. The final way that you get paid from your company is from being a shareholder. And here, as a shareholder, you're entitled to a return on the investment of your company. Now, the return on the investment of your company is called a dividend. Now, to get paid a dividend, there is a need to go through a process. There's a need to have a minute of a meeting of the directors and produce a dividend voucher. At that meeting, you'll decide that the company has enough money, enough profit to pay the dividend and pay all of its creditors, including any corporate tax liability that it might have. And once you've decided that, you can actually pay a dividend. You'll produce a dividend voucher, and that voucher will be used to take money from the company's bank account into your own bank account. They're the only 3 ways that you can get paid from your company. So number 1 is salary by way of PAYE, real-time information. Number 2 is reimbursement of expenses when you've incurred expenses personally. And number 3 is dividends, when you've gone through the process of producing dividend vouchers and taking the money from the company. If you take your money from the company in any other way, then you will start to cause yourself problems. So we often see business owners not understanding these 3 routes to take the money out of the company. It's important that you understand these 3 routes, because if you don't follow this, you will cause problems with your company. Your company is completely separate to you. And therefore, you've got to treat the company's money as somebody else's money, and you must only dip into the company in one of those 3 ways. Now, over and over again, I see business owners not understanding that when they start their companies. If you, as a new business owner, can simply understand that your company is not that money in your company's bank account is not your money unless you take one of those 3 routes to take it out of your out of your company. I think at that stage, I want to also tell small business owners, obviously there are ways to take money out of the company that's a little bit, and not a lot, a little bit more tax efficient than taking all of your money out of salary. What a lot of small business owners do is take some of the money out as salary and the remainder of their profits out as dividends. The reason that you might want to do that is that your salary suffers tax and national insurance. And national insurance as a cost is roughly 25%. And your dividends suffer similar tax and a dividend tax, which runs at 7.5%. So if you had a choice between paying 25% and 7.5% in taxes, you might choose the 7.5% route. Now, if you want to do that, you must get all of that paperwork I spoke about, the salary through PAYE properly, and most importantly, the dividend through the dividend system. You must get all those records recorded down properly. Okay, so I think we're through our 10 minutes of me telling you a little bit about how a limited company operates. And now we've got a few questions to run through. Okay, the first question we have is, I think it's Zane on Facebook Messenger. Hello, what is more efficient, what is more tax efficient between operating as a sole trader and being a limited company? Well, Zane, in terms of tax efficiencies, if you're earning profits of, let's say, 0 to 20, 25,000 pounds, there's going to be very, very little difference between operating as a sole trader as against a limited company. You would probably decide, if your profit's between 0 and 20, 25,000, you'd probably decide based on the risk of your business. If you were a low risk business, you may well decide that you ought to operate as a sole trader. So when I say low risk, what I mean is there very much chance of anyone suing you. If you're higher risk business, or you're going to employ other people, then you might well want to operate as a limited company. Now, the difference in tax between the two: sole traders pay tax and self-employed national insurance. Limited companies, and so sole traders tax and national insurance, the tax will be 0 or 20 or 40 or 45%, and the national insurance will be another 9% on top. So you can quite quickly end up paying quite high levels of tax if you're a sole trader and your profits start to go above 25, 30, 40,000. A limited company pays tax at 19% no matter how big its profits are. So let's say you are a limited company, you're earning £1 million a year, you're still only paying 19% tax, whereas a sole trader, you'll be paying 45% tax. Really the tax efficiencies at low levels of income, 0 to 25,000, very small. As that income starts to get bigger, the advantages of running through a limited company get greater and greater. The advantages are greater with a limited company if you've got, if you're earning more money than you're actually spending. That's where the real advantages of a limited company come. But as I say, today I would be saying really you would want to be a limited company if you wanted to manage your risk, if you didn't want to risk your house, your TV and your car running your business. Hopefully that one answers that for you, Zane. Then we've got Cliff from Facebook Messenger. What kind of expenses can I claim being a sole trader and how can I claim them? Cliff, you're going to be able to claim any expenses that are incurred in running your sole trader business. These expenses can be wholly or partly for running the business. If I give you an example of that, you might well have your telephone bill at home, and that telephone bill may be partly used for your sole trader business and partly used for your own personal use. So let's say that bill is £50 a month. You might well be able to say, well, I've used 25% of that for my business, therefore I'll claim 25% of that £50. So you're looking for expenses that you've paid for because of your business. You can claim proportions of those expenses. As a limited company, those rules are not the same. Okay, now I'm going to move on to Toom from YouTube live feed. Morning. I'm a small business company startup and looking for an accountant. Can you share your details and how to get in touch, please? Yeah, well, my name is Peter Jarman. If you look for our website, which is www.peterjarman.com, you will find us. You will find all our details there. You can also find us on Twitter, PJCO Accountants, LinkedIn, simply look for my name, and obviously Facebook, PJCO Accountants as well. We've also got a YouTube channel, PJCO Chartered Certified Accountants, where we have lots of videos to help you with your QuickBooks. Anton on Twitter DM. As a small business owner, I am delighted to be told I can reopen our pub again. And is there anything financially I need to be mindful of? Well, Anton, obviously, in terms of reopening your pub again, I assume to date that what you've done is furloughed your staff since you closed. And up to date, up until the 30th of June, your staff can be furloughed or not furloughed. But from the 1st of July, or when you open on the 4th of July, you are able to part furlough your staff, which means that you can bring them back to work part-time. And when you've brought them back to work part-time, you will pay them their full salary. And the time that you don't want to reopen and you want to keep those staff on furlough, you can carry on doing that, paying them 80% of their salaries if that's what you were doing, and claiming that furlough back from the government. So that's a small change for you as a pub owner. Obviously, as a pub owner, make sure you've claimed your business rates grant. Make sure that you've gone to your local council and claimed either £15,000 or £25,000, depending on your business rates. If you are a pub and you've gone just over the rateable value for claiming that, there is a discretionary fund available at your local council for businesses that don't quite fit the business rates grant scheme. So have a look at that if you haven't made that claim. And also, as a pub owner, have you made your bounce back loan claim? Obviously, bounce back loans are available to all businesses. So make sure that you've applied for one of those if you need extra finance. Bounce back loans are up to £50,000 and are based on 25% of your turnover. Hopefully that gives you a few ideas, Anton. Nicola from Twitter direct message again. Hello, Peter. Unfortunately, my limited company is going into liquidation due to COVID-19. Are you able to give advice with what I need to do in terms of next step to ensure I'm doing things properly? Well, Nicola, what I would suggest to you is that you go off and speak to an insolvency practitioner. It's only an insolvency practitioner that can help you put your company into liquidation. Your accountant or your tax advisor generally won't be an insolvency practitioner as well, and won't be able to help you with that. But if you have an accountant, they should be able to point you towards the sort of person that could help you put your company into liquidation. If you haven't got an accountant and don't know where to go, certainly, Nicola, I can give you a few names of liquidators that I know that will be able to help you move to the next stage. Let's go on and look now. Who have we got next? We've got Gerard on Facebook Messenger. Hi, Peter. What kind of accounts and records must a limited company maintain? Well, as a limited company, you've got to maintain books and records so that you can show HMRC the income and expenses of the company. What we suggest here is that you use QuickBooks Online. QuickBooks Online as a software package is a bookkeeping package. You will record your sales in there, and you will record your expenses, your expense receipts, your bank account transactions. And from there, it will be possible to create a set of accounts. Limited companies have to prepare accounts in accordance with the Companies Act, and those accounts have to be filed at Companies House and also at HMRC, along with a tax computation telling HMRC how much tax is due on the profits. So I would say look at QuickBooks Online for your accounts and records. In terms of your records, you must also keep copies of all of your receipts and expenses. Let's have a look at our next question now. We've got Mandeep from Twitter direct message. I've set up as a handyman and I'm a sole trader. When do you think it's a good time to appoint an accountant? Mandeep, I would always go to an accountant before you set up. I know you said you've set up, but I'd go and see an accountant because even with a sole trader, you need to know the rules before you start trading. So I would go along and see an accountant. Most accountants will give you a free initial consultation. During that consultation, they'll tell you those rules of the game, and they will then let you. And from there, you'll have a better idea of how to run as a handyman sole trader. They'll probably tell you about a limited company as well, and it may well be that may be more suitable for you. But I would say a good time to go and see an accountant is before you start trading or very soon afterwards. Obviously, what you will have is a need to do a tax return after the 5th of April in the year that you start trading. And that tax return has to be submitted by 31st of January in the following year. So if you need an accountant to help you with that, you really need to go and see someone between the 5th of April and 31st of January. In terms in that, let's say you started in April 19, you will have your handyman accounts running to April 20. You'll have to do a tax return to the 5th of April 2020, and that tax return will have to be submitted by 31st of January 2021. But go and see an accountant as early as you can, Mandeep. Tom on YouTube live feed. Morning. Looking to set up an SPV for buy-to-let with a friend, 50-50 shareholder investment. Any important tips to consider when forming the company with Companies House? Well, Tom, when you are setting up a buy-to-let company, 50-50 with your friend, you are entering into, you're forming a separate entity that you each own 50% of. Now, obviously, in the first place, that's very, very easy. You both want to buy a buy-to-let together. As you go forwards, that may not be what both of you want. You know, it may well be at a later stage that one of you wants to sell the buy-to-let and the other one wants to keep it. When you've got that buy-to-let in a company owned 50-50, really, you've got to both agree on what happens. If you disagree, you've got a problem. So in setting up the company, decide if one of you has an overall casting vote, or decide that, you know, if you don't agree, you don't do anything. If you do agree, you do something. You need to decide how you're going to deal with that 50-50 arrangement. And I would decide that earlier rather than later, because if you decide that with your friend now, you can always revert back to that if something goes wrong in the future. If you don't decide who's going to have the casting vote now, it's an argument sometime in the future. So, I mean, that would be my consideration for you, Tom, when you're doing a 50-50 arrangement with your friend over a buy-to-let. We have got a number of buy-to-let clients, and we do run separate webinars on buy-to-let companies. Let's have a look now. We've got Taylor on Facebook Messenger. Can you be a sole trader and a limited company? What is the policy around that? Yes, Taylor, you could run a sole trader business and a limited company business. Now, I don't think that would make much sense if those two businesses were the same business. I think that if you had got to the point that you decided to form a limited company, then for your business, then it makes sense that you put all the trade through that limited company. Because if you have the same business running as a sole trader and a limited company, you've got double the amount of well, not necessarily double, but more costs to run it that way. You've also got difficulties in deciding what belongs to the limited company and what belongs to you as a sole trader. But if you had two different businesses, so let's say you had a limited company that was a plumbing business, and you then decided you wanted to run an Amazon trading business, selling something entirely different as a sole trader, you could certainly do that. There's nothing stopping you doing that. But I think if you were running those two businesses and they were the same, be very careful that you've separated out all the income and expenses for the limited company from those of the sole trader. Okay, where are we now? We've got Archie on Twitter direct message. Morning, being a sole trader, do I need a separate bank account? Archie, no, you don't need a separate bank account. As I said, when you were if you were a limited company, then you need a company bank account to operate. Archie, if you're a sole trader, we would suggest you use a separate bank account because it's easier to record down all your transactions. But there is no need to use a separate bank account. You could use your personal bank account. The only disadvantage of that is that if you use something like QuickBooks Online, you're going to have to record down all the transactions that went through your personal bank account. And a lot of those will simply be drawings, your bills for Tesco's, your going shopping, all those sorts of things will get recorded down as drawings. We've now got Will on Twitter direct message. Morning, Peter. If I were to register as a limited company, does this mean others can use our company name? No. If you've registered a limited company as XYZ Limited, you are the only company that can use XYZ Limited. Obviously, what other people can do is use XYZ Southern Limited, and they could use something similar to your limited company's name. Now, if they were trying to gain out of your business by doing that, then you would, if they were trying to gain out of your business by doing that, then you could stop them from trading. It would take a bit of legal work to do that, but you could stop them from trading. Okay, if you have any other questions regarding QuickBooks Online or today's presentation, get in touch with QuickBooks support team on Facebook. You can find all my details by visiting peterjarman.com. That's www.peterjarman.com, and we have plenty of helpful QuickBooks videos on our YouTube channel, PJCO Chartered Certified Accountants. Coming up on Ask an Expert on Monday is Aaron Patrick, who is a chartered accountant and head of accounts at Bofix. He is also director of Apple Core Group, a small family empire which ensures he practices what he preaches. Tune in on Monday and ask Aaron your burning questions. A reminder, if you need any more advice, join the official QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. Thank you and stay safe. Goodbye.